वाईफाई चल रहा था घर का, और ना ही मेरी तबीयत ठीक थी। सुबह उठते फॉरहेड कुछ ज़्यादा ही पेन कर रहा था। देन आई थॉट लेट्स take a night session. It's will be going to about 6 hours. So if you want to join, you can join the session and start studying with me. And I am thinking to do accounts now, and this is my entire setup. So let's start studying. And if you guys like this session, do like the video and also subscribe to the channel to stay connected. And now let's go. And don't forget to mark your attendance in the comment section, and make sure you like the video. And let's go now. And this is my to-do list for today. Now let's see if I can complete it now or not. Welcome to the session, guys. Do consider to like the video. Welcome to the session, guys. So in the balance sheet, equity and liabilities, the first is the shareholders fund, share capital, authorized, issued and subscribed, authorized, issued and subscribed, called up, call in arrear, paid up capital, other than the cash, bonus share and buyback, reserve and surplus. Hello guys, hello everyone. I am preparing for CA Inter. My exam is in Jan. If you guys wanna join the session, then let's continue with the studies. Yeah guys, do consider to subscribe the channel to stay connected, so that you can stay motivated like me and focus on your studies like me. And oh, thank you Hitesh, thank you for such motivational line. Thank you for saying it. Now reserve and surplus money received against the share warrants. Now the share application money pending allotment. First is the share capital, second is reserve and surplus. First is the share capital, second is reserve and surplus, third is money received against the share warrants. Now second share application, money pending allotment. Now share application, money pending allotment, non-current liabilities, long-term borrowings, में debenture, bonds, loans, public deposit, security and unsecured and unsecured book. Then deferred tax liability net, other long-term liabilities, D long-term provision for the gratuity, long-term provision for the gratuity. Provision for gratuity. Now current liabilities, short-term borrowings, current maturities of long-term borrowing, short-term loans, and then bank overdrafts. Trade payables में creditors and bills payable. Other current liabilities में outstanding expenses, calls in arrears, calls in advances, dividend payable. Then short-term provisions में provision for tax only. Now assets में B current assets, non-current assets में property, non-current assets में A part is property, plant and equipment and intangible assets. In property, plant and equipment there are four, that is property, plant and equipment, plant and machinery, furniture, office equipment, land and building, patent, copyright, trademark, software, goodwill. Then the capital work in progress, building under the construction. Then intangible asset under the development, non-current investment. B is non-current investment. First is non-current asset, second is non-current investment. Non-current investment, deferred taxes, net deferred tax asset, net long-term loans and advances, known to the third party a long period. Then other non-current assets, the security deposit, current asset and current investment में manufacture, raw material, work in progress, finished goods, stock in trade. Then the inventories, trade receivable, bills receivable, debtors less provision for the doubtful debts. Then cash and cash equivalents, cash, bank deposit up to 1 year. This short term loans and advances, loan to the staff, third party and advance checks. Then the other current assets में advance interest. Now important disclosures in the notes to account the share capital. For each class of the share capital, the different classes of the preference shares to be treated separately. The number of the amounts of the share authorized, the number of the amount of the shares authorized, the number of the shares issued, the subscribed and fully paid and subscribed but not fully paid up. Par value per share are reconciliation of the number of the shares outstanding at the beginning and at the end of the period for the period of 5 years immediately preceding the date at which the balance sheet is prepared. Aggregate number of the class of the shares allotted as a fully paid up and pursuant to the contracts without payment being received in cash. Now aggregate number of the class of the shares allotted in fully paid up by way of bonus shares. Aggregate number of the class of the shares bought back. Now list of the shareholdings. Now list of the shareholders holding more than 5% of the shares. Now shareholding of the promoters. Okay. Reserves and surplus, debit balances of the profit and loss can be shown as a negative figures in the surplus. Similarly, balance reserve and surplus after adjusting the negative balances of surplus, if any shall be shown under the head reserve and surplus, even if the resulting figure is in the negative. Now the current maturities of the long-term borrowings shall be disclosed separately under the short-term borrowings and not under the current liabilities. Now the trade payables schedule, aging schedule, MSME, other dispute dues, MSMEs disputed, other dues, others. Now the trade receivables aging schedule. Okay, this is just a theory part. Now plan P&L. Revenue reserve, revenue from the operation, principal revenue generated, accounting and ancillaries, the sales of the goods and the services, other interest, dividend, rental payment, profits and the sales of the assets. Expenses में first is the cost of expenses में cost of the material consumed, manufactured, raw material, opening stock at purchases less closing stock, then the purchase of the stock in trade, purchase of the stock in trade, trader, purchase of the stock in trade, purchase of the purchase net returns, then the change in the inventories of the finished goods, work in progress and stock in trade, opening minus closing, then the employee benefit expenses, finance expenses, finance cost, depreciation and amortization expenses, finance cost, interest on loan, debenture, loan proceeding, loan processing fees, etc. Then depreciation and amortization expenses, depreciation on the PPE, amortization of intangible assets, other expenses, rent, carriage, advertising, preliminary expenses, bad debts, auditors fees, and then bank charges. Now profit before the exceptional extraordinary items, then the exceptional items, litigation settlement, retrospective loan, profit before the extraordinary items, loss by the earthquake, fire, insurance, etc., profit before tax, then less tax expenses, current tax and deferred tax, the profit and loss from the period of continuing operation. Okay. To compute a company shall disclose by any notes additional information regarding the aggregate income, salaries and the wages, contribution to the provident fund and other funds, expenses of the employee stock option plan and ESOPs and the employee stock purchase plan, ESPP, then the staff welfare expenses. Now any item of the income or the expenditure which exceeds 1% of the revenue from the operation, or 1 lakh, whichever is higher, the payment of the auditor. Then the taxation matters, for taxation matter, for company law matter, for management services, for other services, for reimbursement of the expenses in case of the companies covered under section 135. Amount of the expenditure incurred on the corporate social responsibility act is other disclosures, the corporate social responsibility where the company covered under section 135 of the Companies Act 2000. The following shall be disclosed with regard to the CSR activities: the amount required to spend on the companies during the year, the amount expenditure incurred, the shortfall of the end of the year, the total of the previous year's shortfall, the reasons for this shortfall. There is cryptocurrency and the virtuals, the shortfall, the total previous year shortfall, the reasons of the shortfall, the nature of the CSR activity, the details of the related party transaction, example contribution to the trust controlled by the company in relation to the CSR expenditure as per the relevant accounting standards, where the provision is made with respect to the liability incurred by the entering into the contractual obligations. Movement in the provisions during the year should be separately. Now details of the cryptocurrency by the or the virtual currency. Where the company has traded or invested into the cryptocurrency or the virtual currency during the financial year, the following shall be disclosed. Now the profits or the loss of the transaction involving the cryptocurrency or the virtual currency, amount of the currency held as a reporting details on the reporting, the deposit of the advances from the persons or the purpose for the purpose of trading or the investing in the cryptocurrency, virtual currency. Then the details of the willful defaulter, where the company declares a willful defaulter by the company or the financial institution, details to be given like amount. Okay. Relationship with the stock of the company is the contingent liabilities and the commitments to the extent of not provided for. The claims against the company not acknowledged as the debt guarantees areas on the fixed areas of the fixed indebtedness of the preference shares, estimated amount of the contracts remaining to be executed on the capital amount and not provided, uncalled liability on the shares and the other investment, partly paid bills of the discounted and not yet matured, other money for which the company is contingently liable for other commitments than now equity and value what is given. We have to the following information is given. It notes to the question of prepare the balance sheet. As at the end of the balance sheet, you are required to show the company. You note to the food balance sheet as per the necessary. Now equity share capital. Okay, all scenarios: this land and building plant facility, furniture, general reserve, loans from the state financial corporation, stock, finished goods, raw material, provision for the taxation, salary, debtors, allowances, advances, the dividend payable, the profit and the loss account, the cash and the balance cash at the bank, loans unsecured, and the sundry creditors for the goods and the expenses. The following additional information is also provided: 2000 equity shares were issued for the consideration other than the cash. 2000 equity shares. The creditors of 52,000 are to be more than 6 months than the cost of the asset building is 3,50,000. Okay. The plant and the machinery furniture is this. Then the balances of 1,50,000 in the loan account with the state financial corporation is inclusive of the 7,500 for the interest accrued and but not due. Balance of 1,50,000, 1,50,000, 1,50,000 in the state finance is inclusive of the 7,000 for the interest accrued but not due. The loan is secured by the hypothecation of the plant and machinery. Okay. The bank balances. The balances at the bank includes 2,000 with the Perfect Bank Limited, which is not a scheduled bank. The bills receivable for 2,75,000 maturing on 30th June have been discounted. The company had the contract for the erection of the machinery at the rupees 1,50,000, which is still incomplete. Now, equity and liabilities. Shareholders fund share capital is this reserve and surplus, non-current liabilities, long-term borrowings, current liabilities, trade payables, others, current liabilities, short-term borrowings, short-term provisions, assets में non-current assets, property, plant and equipment, and intangible assets, property, plant and equipment, current assets में inventories, trade receivables, cash and cash equivalents, and short-term loans and advances. Share capital and equity. Share capital issued to subscribe 10,000 equity shares or rupees 100 is above 2,000. Okay. Reserve and surplus. General reserve surplus, profit and loss account. Then long term borrowing secured and term loan secured. Term loan from the state financial corporation would be this. Secured hypothecation of the and unsecured 1,21,000. Then the other current liabilities would be interest accrued but not due on loans, interest accrued but not due on loans, dividend payable would be this. Okay, completed. The short term provision would be this. The property, plant and equipment would be like this, and the inventories, raw material, finished goods, then the trade receivables like this. Debtors outstanding for the period exceeding 6 months. Other debts, cash and cash equivalents, cash at the bank, the scheduled bank with other banks, Perfect Bank Limited. Okay, cash in hands. There is a contingent liability for the bills discounted but not yet matured amounting to 75,000. The estimated amount of the contract remaining to be executed on the capital account and not provided for the 1,50,000. It has been assumed that the company had given the contract for the purchase of the machinery. Question number 2. Equity share capital of rupees 100 is 8,05,000, 8,05,000, 5,006%. Preference shares of rupees 100 is 5,006%. Preference share of rupees 100 is 9%. Debentures. General reserve 40 lakh. Profit and loss account for the previous year of the previous year 72,000. Sales. Trade payables. Provisions for the depreciation of the plant and machinery is suspense account is 40,000. Then the last land at cost 24 lakh. Then the plant and machinery at cost 7,70,000. Trade receivables 19 lakh 60,000. Inventories as on 31st March 2021 is 9 lakh 50,000. Bank 2 lakh 30,900. Adjusted purchases is 22 lakh 32,000 and 100. Then the factory expenses 15 lakh. Then the administration expenses 3 lakh. Then selling expenses is this 14 lakh. Debenture interest is 36 lakh and goodwill is 12 lakh 15,000. Then additional information. The authorized capital of the company is 5 lakh 6%. Preference shares of rupees 100 each. 1,000 equity shares of rupees 100 each, that is 1 crore. Then issued equity capital as on 1st April 2020 stood at rupees 7,20,000. That is 6,000 shares of fully paid up and 2,000 shares of rupees 60 paid. Directors made the call of rupees 40 per shares on 1st October 2020, and the shareholders could not pay the calls on the 100 shares, and the shares were then forfeited and reissued to 90 per shares as a fully paid. On 31st March 2021, the directors declared the dividend on 5th on the equity shares, transferring any amount that may be required for the general reserve. Ignore the taxation. The company, on the advice of the invented independent researcher, this is to revalue land at 36 lakh. The suspense account
of rupees 40,000 represents the amount received from the sales of the sum of the machinery on 1/4/2020. The cost of the machinery was 1 lakh and the accumulated depreciation was 30,000. The depreciation to be provided on the plant and machinery is at 10% of the cost. The amortized one-fifth of the goodwill. You are required to prepare H Limited's balance sheet as on the date of the and the statement of the profit and loss with notes to the accounts for the year ended on 31st March 2021 as per the schedule 3.
Hello guys, are you there? Are you all there?
10% on the equity share. This experiments account of 40,000 represents the received from the sales of the
Hello Sahil Roy. Do subscribe the channel to stay connected.
The depreciation is 300 pounds machinery, 5 to 10% of the cost. The plant and machinery has been paid 1,72,000. No, it's not renewable, guys. the authorized share capital of the company is 2000.
subscribe the channel to stay connected.
Now, within section 123 of the Companies Act 2013, dividend to be declared upon paid profit of the company out of the years of the previous years, but out of providing the depreciation as per the schedule for the business non depreciation. The withdrawal from the reserves, the condition should be, the condition should be, condition should be followed. First is the dividend rate cannot be exceed the average of the last 3 years, and the maximum amount that can be withdrawn from the reserve should be less than 10% of the paid up plus free reserves. The minimum amount left in the reserve after withdrawal should be more than 15% of the paid up share capital, 15% of the paid up share capital. In this case, the equity shares, 50,000 final equity shares of this turn is fully paid up. Capital general reserve is this, evaluation reserve is this, and then net profit is this. Now, additions of the last 3 years are okay. The condition since 10% of the last 2 years can be declared on maximum amount that can be withdrawn from the accumulated is 750,000 is okay. Now the balances of the reserves of the 2021 with this is should be called to now dividend adjustment. If on 2020 the dividend proposed by the board of the directors counting entries of the disclosure of the account declare P&L account 21-22, 21-22, 21-22 declare P&L account debit to dividend, P&L account debit to dividend, payable account, P&L account debit to dividend, payable account, P&L account debit to dividend, payable account, paid dividend, payable account debit to bank account, dividend, payable account debit to bank account. Example, the profit of the year is 20 lakh and the opening balances is 3 lakh, and then equity shares of rupees 50 lakh each. Then the dividend declared is 10% transfer to the general reserve. General reserve 5% of the profit, 5% of the profit moves to the reserve. Is P&L surplus. P&L surplus opening is this, current year profit is this, transfer to the general reserve. This is dividend payable will be this, and the general reserve would be like this. In adjustment, the trial balance अगर सैलरी दिया हुआ है 50,000 का सैलरी पीपल आउटसाइड द trial balance is this, and the employer benefit expenses would be addition of both the and current liabilities में of course जो outstanding बाहर दिख रहा है वो, then the salary and outstanding both given, then ये जाएगा P&L में, आगे जाएगा current liabilities में. then trial balance में मशीनरी दिया हुआ है 1 lakh and depreciation at the rate of 20%. तो P&L depreciation account that is 1 lakh into 1 property plant and equipment is unnecessary. मशीनरी depreciation दोनों ये मतलब कि इससे इफेक्ट मिल चुका है, तो मशीनरी एज इट इज़ P&L प्रॉपर्टी प्लांट एंड इक्विपमेंट में चला जाएगा, और डेप्रिसिएशन एज इट इज़ P&L में माइनस करके जाएगा. देन बैलेंस शीट में मशीनरी है 2 lakh and depreciation accumulated depreciation provision for depreciation is 50,000. depreciation at the rate 10% on cost, 10% on written down value method. अगर देखा जाए तो depreciation would be balance sheet में okay. Machinery is this, accumulated depreciation will be minus and accumulated depreciation will be minus, and this will be the cost as on the date. Machinery will have an accumulated provision depreciation. Opening stock purchases video तो closing stock यहाँ पर तो purchases यहाँ पर ऑलरेडी आएगा, और चेंज इन इन्वेंट्री एज इट इज आ जाएगा. डेप्रिसिएशन के लिए तो 10,000 एज इट इज P&L में चला जाएगा. बैलेंस शीट में प्रॉपर्टी एंड प्लांट एंड इक्विपमेंट एक्यूमुलेटेड डेप्रिसिएशन प्रोविजन, उसके क्या इसलिए जो एक्यूमुलेटेड डेप्रिसिएशन है उसको माइनस कर देंगे. सिंपल आंसर आ जाएगा. ट्रायल बैलेंस में क्लोजिंग बैलेंस देगा. एडजस्टेड परचेस एज इट इज एडजस्टेड परचेस एज इट इज P&L में, एंड क्लोजिंग स्टॉक एज इट इज इन द P&L in the current assets inventory is 15,000. okay. If the written down value of the closing stock is 20,000 more than the opening stock, then the opening stock will be 30,000 and the purchases is 10 lakh. 20,000 purchases is 10 lakh. purchase again purchase change in inventory would be purchases in like 20,000 and engine inventory is 20,000. Case 1, appearing in the trial balance dividend payable is 50,000 and to P&L account debit to dividend payable account, P&L account debit to dividend payable account. Then the trial balance dividend payable account, dividend to dividend including dividend payable is 30,000. Entry pass dividend account debit to bank account, dividend account debit to bank account. Note to the reserve and surplus P&L डिविडेंड पेड माइनस कर देंगे. करंट लाइबिलिटीज फर्दर करंट लाइबिलिटीज में डिविडेंड पेबल आ जाएगा 50,000. P&L account of the dividend payable account. We are paying outside the trial balance the dividend proposed now and accounting value disclosure in the books to accounts dividend declare. First is entry P&L account debit to dividend payable account balance is second balance is no to reserve and surplus no to reserve and surplus. P&L surplus less dividend payable current liabilities other current liabilities में dividend payable भी आ जाएगा. Okay. Then share forfeiture and ratio the 20,000 shares of rupees 100 each fully called up. Calls in the arrears of 3,000 shares. 3,000 shares are the rate to and calls in arrears share for PJ the capital reserve the capital share the share capital share over 2 lakh shares. Okay, calls in arrears as it is minus dividend on 1,92,000 calls in arrears share for which is and share reissuing of the share capital. Okay, share capital to share for PJ to calls in arrears. Share capital would be this. The share for feature would like not show this. Okay, then dividend on 1,70,000. Share reissued at 5 per share. The bank account the debit to share for future account to share capital account share for future account debit to share for future account debit share for future account debit to share capital account share for future account debit to share reserve for the capital reserve account share capital account 20,000 shares or rupees reserve and surplus will be okay. Dividend on 2 lakh shares. Okay.
So guys, finally it's about 1 hour and 32 minutes and I have finally completed the chapter financial statements. Now let's take a small water break and then we will continue with the second chapter, that is cash flow statement. let's continue with the second chapter, that is cash flow statement, and hope you guys are doing well and studying well. Stay focused like that. Now listen. Cash flow statement, okay. Cash equivalent in any example cash flow power and plot. The examples of the cash flows, the cash flow tables, okay. Operating activities, principal revenue, okay. Acquisition of disposal and long-term assets and investments, financing activities that result in the change in the size and the acquisition of the owner's capital borrowing. Now, interest and dividend received, normal non-financial enterprises, normal non-financial investing activities, financial enterprises, operating activities, dividend paid, financing activities, always done, okay. In case of the financial enterprises, the following activities are classified as operating activities since they are related to the main revenue producing activities of that enterprise, the purchasing and the purchases and the sales of the shares of the debentures of other companies, or the cash dividend received on the shares of the other company, or the interest received on the debentures of the other companies, loans and the advances granted. Now, interest received on the loans and the advances granted. These are example: cash receipt of the cash payments and other insurance of an insurance entity for premiums and the claims amount, annuities and other policy benefits, okay. The cash non-cash transactions examples: the equity shares, debentures against the purchase of the asset, convertible debentures, asset account, debit, equity share, asset account, debit, equity share capital, and the venture account, equity share capital, equity share, issue of the security, convertible debentures account, debit, equity share stock account, calculate the cash flow from investing, financing, and calculate the increase and decrease in the, okay. Now, how to compute the cash flow from the operating activities under the direct method. Operating receipt in the cash flows, cash sales received from the reverse trading commission, received the opening payments in the cash, cash purchases, cash paid to the suppliers, wages. Now see cash generated from the operating and before the taxes, income tax paid, cash flow from the extraordinary items, C minus D. Extraordinary items, okay. We prepare the statement of the Ramalan okay, accordance with the balances. So this is from the customer over this cash payment made to the supplier will be this, and then cash payment of the wages and the salaries, payment of the overheads, taxation, payment of the taxation, cash generated from the operation, taxation net cash flow from the operating activities, cash flow from the investing activities, proceeds of the sales of the investment, and then proceeds of the sales of the property, plant and equipment, proceeds of the investment, and the process of the property, plant and equipment, net cash in the investing activities, net cash used in investing activities, proceed from the sale of the investment, 459, proceed from the sale of the property, plant and equipment, proceeds of the investment, okay. The proceed from the financing activities, cash flow from the proceeds from the issue of the shares, proceed, payment of the dividend, payment of the fee. Question: prepare the cash flow statement for the year ended on 31st 2015 using the value of the total cash. The total sales for the year were 398 crores, out of which the cash sales amounted to 60 crores. Okay, total sales out of which equity receipts from the credit customer during the year total 134 lakh. The purchases for the year amounted to 20,000 and the credit purchases were 80% of the balances now on 40,000, 84 crores and 30% on 92 crores on the suppliers of other consumed goods and the services were paid 19 crores in cash. The employees of the enterprises were paid to 20 crores of each, 20 crores in cash.
Now the fully paid difference, the fully paid differentials of the cash value of rupees 32 crores were redeemed. Now the equity shares of the face value of rupees 20 crores were allotted if the on the fully paid up at the premium of the 20%. Now the debentures of rupees 20 crores at the premium of 1% were redeemed. Debentures holders were issued equity shares in the lieu of the debentures. Now 26 crores were paid by way of the income tax and income machinery costing 25 crores. Cost was purchased in the part of the exchange of the old machinery. The book value of the old machinery was 13 crores. Through the negotiation, the vendors agreed to take over the machinery at the higher value of 15 crores. The bank was the balance. The balance was paid in cash to the vendor. Investment costing 18 crores were sold at a loss of 4 crores. Dividends totaling 15 crores were also paid. Debentures interest amounting 2 crores was paid. Then on 31st March 2021, the balance with the bank and cash on hand total rupees 2 crores. Okay, now cash collected from the credit customers, cash purchases, payment to the creditors will be this, then the payroll to the suppliers of the consumables and the services, payment of the employees to this 20. Then the cash flow from the operations 145 less income plus the cash generated from the operating activities is this. Cash flow from the investing activities, payment for the purchase of the machine, okay. Then proceeds from the sales of the investment is this, then the cash generated from the investing activities, financing activities, redemption of the preferential proceed from the issue of the equity shares, debentures of the debentures, interest paid, dividend paid. Then the net cash used in the financing activities is the net increase in the cash and cash equivalent. Add the cash and cash equivalent as on 4/2021 cash and cash equivalents on 31st March. Okay. Now how to compute the net cash flow from the operating activities under the indirect matter. First, calculate the net profit before the taxation and the extraordinary items. Calculate the net profit before the taxation and extraordinary items. Closing balance of the P&L account. Closing balance of the P&L account. Closing balance of the P&L account. Then the less opening balance of the P&L account, or add the opening balances of the P&L account debit side. Now add the dividend declared for the current year. Add dividend declared for the current year. Interim dividend paid during the current year. Transfer to the reserves the provisions for the tax made during the current year. Refund of the tax credit to the P&L account. Refund of the tax credit to the P&L account. Less extraordinary items if any, credited to the P&L. Example, insurance proceeds and the earthquake disaster settlement. And extraordinary debit items, example, loss due to earthquakes. Net profit before the taxation and extraordinary items. Step to calculate the operating before the working capital changes. Calculate the operating before the working capital changes. Net profit before the taxation and the extraordinary items before the taxation and the extraordinary items. Adjustment of the non-cash and the non-operating items. For example, depreciation, interest on debentures and the loans, whether short-term or long-term, preliminary expenses, underwriting commission, discount on the issue of the debentures, return of goodwill, patents, trademark, copyright, amortized loss on the sales of the investment. Okay, dividend income, rental income. Profit. Step 3, calculate the cash flow from the operations before the extraordinary items. Operating before the working capital changes, changes in the current assets and current liabilities. Decrease in the inventories, trade receivables, etc. Increase in the trade receivables, outstanding expenses, etc. Increase in the inventories, trade receivables, etc. Decrease in the trade receivables, outstanding expenses, etc. Cash generated from the operations. Step 4, calculate the cash generated from the operations after the taxes but before the extraordinary items. Cash generated from the operation less the income tax paid. Note, the income tax should be related to the operating activities only. Now the cash flow from the extraordinary items. Step 5, calculate the net cash from the used in the operating activities. The cash flow from the extraordinary items. extraordinary items. Example, insurance proceeds for the earthquake disaster, settlement amount and cash flow for used in the operating activities. Now the following are the summarized balance sheet of the FMU European liabilities. Additional information: the dividend of rupees 1 lakh was paid during the year, and the machinery during the year purchased 1,20,000 machinery. The machinery of the other company was purchased for the consideration of 1 lakh in the equity shares. Now the income tax provided during the year is 55,000. The company sold the some investment at the profit of 10,000, which was credited to the capital reserve. There was no sales of the machinery during the year. The depreciation written off on the land and building is 20,000 from the year, which is prepared the cash flow statement for the year ended on 31st March 2020. As per the ESG indirect method, the cash flow from the operating activities, net profit made during the year, adjustment for the depreciation of the machinery, adjustment for the depreciation of the land and building, the operating profit before the changes in the working capital, operating profit before the changes in the working capital, decrease in the inventory, then increase in the trade receivables, decrease in the trade payables, income tax paid is this, then net cash flow from the operating activities, and the cash flow from the investing activities, purchase of the machinery, sales of the investment, the cash flow from the financing activities, issue of the equity shares, 2,50,000 of the repayment of the loan from JP, then the net increase in the cash and the cash equivalent, the cash and cash equivalents at the beginning of the period, at the cash and cash equivalent at the end of the period, working notes, increase in the P&L credit balance. Add transfer to the general reserve 50,000. Add provision for the taxation made during the year 55,000. Dividend payables during the year is 1,25,000. 2,60,000. The machinery account अगर देखा जाए तो बैलेंस ब्रॉट डाउन बैंक हमने एक्स्ट्रा फर्दर देन इक्विटी शेयर कैपिटल इसके लिए हम 1 लाख का दिया. डेप्रिसिएशन फिगर बैलेंस शीट फिगर बैलेंस डाउन हो गया. प्रोविजन फॉर द टैक्सेशन तो बैलेंस ब्रॉट डाउन इतना था, हमने P&L अकाउंट से इतना पे किया और इतना ब्रॉड फॉरवर्ड तो कैश से मतलब हमने इतना पेमेंट किया. डिविडेंड पेबल अकाउंट अगर देखिए तो बैलेंस ब्रॉड डाउन था. P&L अकाउंट से बैलेंसिंग फिगर निकला, इतना पेमेंट पर इतना हमें लेके जाना. और नेक्स्ट इन्वेस्टमेंट अकाउंट देखा जाए तो बैंक का बैलेंस ब्रॉड डाउन इतना 1 लाख का इन्वेस्टमेंट था. उसमें से हमने प्रॉफिट ऑन द सेल ऑफ द इन्वेस्टमेंट हमने कैपिटल रिजर्व में ट्रांसफ़र कर दिया. बैंक 60,000, बैलेंसिंग फिगर रुपये 50,000. The following information was extracted from the books of the S Limited for the year ended 31st March 2020. The net profit before taking into account the income tax and the after taking into account the following items was 30 lakhs the depreciation on the property plant, 7 lakhs the discount on the issue of the debentures return of 45,000, the interest on the debentures paid 4,35,000, the interest, the investment of the investment on the book value 3,50,000 sold for 3,50,000 interest received on the investment 70 lakh. Income tax paid during the year is 12,80,000. Then the income issued 60 lakh equity shares of rupees 10 each at the premium of 20% on 10th April 2021. 20,000 9% preference shares of rupees 100 each were redeemed at 31st March. Redeemed at 31st March 2020 at the beginning of 5% dividend paid during the year amounted 11 lakhs. A plant and a new plant costing 7 lakhs was purchased in the part exchange of the old plant, and on 1st January 2022 the book value of the old plant was 8 lakhs, but the vendor took over the old plant at the value of 6 lakh only. At the value of 6 lakh only. The balance amount was paid to the vendor through the check on 30th March 2022. The company decided to the value inventory at cost, whereas previously the practice was to value the inventory at cost less than 10% the inventory according to the books of the 31st was 214 lakh 17,000. The inventory on 31st November was correctly valued 13 lakh 15,000. The current assets and the current liability is and the beginning of the year currently inventory opening and closing balances has been given equal to cash flow statement. Now the cash flow from the operating activities, net profit before income tax and extraordinary items 30 lakh. Then the depreciation on the property, plant and equipment, depreciation on the property, cash flow from the operating activities. This is net profit before the income tax and extraordinary benefit 3 lakh, 30 lakh. Now the depreciation on property, plant and equipment 7 lakh. Discount on the issue of the debentures 45,000. Interest and debentures paid 4,35,000. Interest on the investment received and the profit on the sales of the investment, stock adjustment. Okay. Operating profit before the working capital changes, then the increase in the inventory, okay, decrease in the trade receivable, increase in the trade payables, increase in the outstanding expenses, then cash generated from the operations, income tax paid, net cash flow from the operating activities, cash flow from the investing activities would be sales proceed of the investment, interest received on the investment proceeds of the fixed asset 7 lakh minus 6 lakh. Then the net cash flow from the investing activities, cash flow from financing activities, proceeds of the issue of the equity shares, redemption of the preference shares, dividend paid, interest on the debentures paid. Then the net cash used in the financing activity, net increase in the cash and the cash equivalents during the year. Then the add cash and cash equivalents. Okay, the cash and cash equivalents 1030. The question is after considering only the items listed and the information 1 to 1 of the question, hence the amount of the loss on the plant cannot be added back. Okay, equity share capital of the year 30 60,000 equity shares issued to the grade at par for the supply of the machinery, the plant and the profit and loss of the 50,000 for the equity shares of the external shares are related. Now the cash flow from the operating activities of closing balances for the profit and loss account, closing balances for the profit and loss account, and then less opening balances as for the profit and loss account 8,000, less dividend received 50,000. Cash flow from the investing activities, dividend received 50,000. Cash flow from the financial activities, proceeds from the issuance of the share capital, equity share issued at cost at for cash, share premium, securities premium 5,50,000 minus 5,50,000. Then the redemption of the preference share is 7 lakh minus 6,000. Now the machinery acquired by the issue of the shares does not amount cash flow amount to the cash flow, hence not considered for the cash flow statement. Okay. Now important points: the loans advantages given for the interest and for financial enterprise operating cash flows for non-financial investing activities when given to the subsidiaries, investing cash flows for all the enterprises, operating cash flows for all the enterprises, interest earned from the customers for the late payments or operating cash flows mhm, or operating cash flows for non-financial advances taken and interest paid. Operating cash flows for non-financing advances taken from the customer. Advances taken from the customer. Operating cash flows. Now interest paid to the supplier for a late payment are operating cash flows. And for all the enterprises, the interest taken as a part of the inventory cost in accordance with the AS16 are operating cash flows. Now the investment made and dividend earned, investment made and dividend earned, investment made and dividend earned for non-financing active enterprises. Operating cash flows for non-financial enterprises. Investing cash flows investing cash flows given to the subsidiaries, investing cash flows for all the enterprises. They tax deducted at the sources. If concerned incomes are operating incomes, the operating cash flows. If concerned incomes are investment incomes, investing cash outflows. If concerned expenses are operating cash flows. Now if concerned expenses are financing cash flows. Now insurance claims received against the loss of the stock or the loss of the loss of profits, extraordinary operating cash flows. Against the loss of the fixed asset, extraordinary investing cash flows. Now prepare the cash flow from the investing activities as per the AS3 of the MS Subham Creative Machinery acquired by the issue of the shares of the face value 2 lakh. The claim received or the loss of the machinery in the earthquake, the unsecured loans given to the associate, the interest on the loan received from the associate company, acquisition dividend received on the investment made, then debentures interest paid, the term loan repaid, the interest received on the investment TDS 8,200 was deducted on the above interest. Hello external. Yes, shadow. Yeah. Yes, external. It is my first attempt. TDS 8,200 was deducted on the above interest. 73,800 purchased debentures of X Limited on 1st December 2021. External, this is my first attempt. Are you also being safe? Purchased debentures of X Limited on 1st December 2021, which was redeemable within 3 months. Which was redeemable within 3 months. 3 lakh and the book value of the plant and machinery sold. Loss income 9,600. The cash flow. Cash flow statements from the investing activities. We can see cash generated from the investing activities. Interest on the loan received 70,000. Pre-acquisition dividend received on the investment 52,600. Unsecured loan given to the subsidiaries 5 lakh. Then the interest received on the investment gross value TDS deducted on the interest. Then sale value of the plant and machinery would be this. Then cash used in the investing activities before the extraordinary items. Okay, cash used in the investing extraordinary claims received. Extraordinary gain received for the loss of the machinery from the net cash used in the investing activities after extraordinary items. Namely, the venture interest paid and the term loans repaid all the financing activities and therefore not considered for the preparing the cash flows. Cash flow from the investing activities machinery acquired by issue of the share does not amount to the cash flow, hence they also not considered in the above cash statement. Now, the investment of the made in the debentures are for the short term. It will be treated as a cash equivalent and will not be considered as the outflow in the cash statement. Thank you, Satvik, and same to you. How would the following cash flows be classified in accordance with the AS3? And yeah, guys, do consider to subscribe the channel and like the live stream. The following cash is classified in accordance with the AS3. The corporate income tax paid amounting to 70 lakhs during the reporting period. 70 lakh, it is the operating cash flow. Now the payment of the advance tax rate like 75,000 out of the 70,000. 75,000 was towards the capital gain arising on the capital investing cash flows. 70 investing cash flows and fixed deposit withdrawn by the customers from the State Bank of India 3 crores. It is operating cash flow. And the Ridgeway completed a non-financial company has the following activities. Dividend paid for the year. It is a financing activity. Dividend paying is a financing activity. How it will be a financing activity? If you take any loan, it will be a financing to your company, then it will be a financing, and it is on the interest income earned on the investment. It is on the interest income earned on the investment made. It is on the interest income earned on the investment made. Investing activities, loans and advances given to the suppliers and the interest earned from the operating. It would be a operating. Then we deposit with the bank for the term of 2 years. Investing now highly liquid marketable securities without risk of change in the value. Cash equivalent, highly liquid marketable securities, and the investment made and the dividends earned on them. Investing, then the insurance claims received against the loss of the stock or the loss of the profit operating. Then the loans and the advances given to the subsidiaries and the interest earned from them. It is investing. Okay. Then the issue of the bonus shares, no cash inflow, cash outflow. Then it will be no changes in the cash. Then the term loan paid, term loan repaid, it will be a financing. Then the reporting on the net basis as per AS3. The cash flow statements and on the enterprise should report separately major classes of the gross cash receipts and the gross cash payments arising from the investing and the financing activities, except in case of cash receipts and the payment on the behalf of the customer. Then when the cash flows reflect the activities to the customer rather than the goals of the enterprises, the cash receipts and the payments of items in which the turnover is big, the amounts are large, and the maturities are short, then the cash flows arising from each of the following activities of the financial enterprises may be reported on the net basis. The cash receipts and the payments for the acceptance and the repayment of the deposit with a fixed maturity date, the placement of the deposit and the withdrawal of the deposit from the other financial enterprises, the cash advances and the loans made to the customers and the repayment of those advances and the loans. Then the business purchase aggregate cash flows arising from the acquisition and disposal of the subsidiaries or other businesses units should be presented separately and classified as the cash flow from the investing activities. The cash flows from the disposal and the acquisition of should not be netted off. Then an enterprise should disclose in aggregate in respect of both the acquisition and the disposal of the subsidiaries or other businesses units during the period. Each of the following the total purchases for the disposal consideration and the portion of the purchase of the disposal consideration discharged by means of the cash and cash equivalents, exchange gains and losses. Exchange gains and losses exchange in respect of the cash and cash equivalent foreign currency. Now the resultant difference cash and cash equivalents as per the cash flow statement recognized in the balance sheet and reconciled in the net of cash flow statement. The Ruby exports and had a bank balance of US $25,000. The stated in the books of the at 16,76,215 using the rate of the exchange 67.05 per US dollar prevailing on the date of the receipt of the dollar. However, on the balance sheet date, the closing rate of the exchange was 67.80 and the bank balances had to be restored at 16,95,000. Comment on the effect of the change in the bank balances due to the exchange rate fluctuation and also discuss how it will be discussed in the cash flow statement of the Ruby exports with reference to the AS3. Now the cash flows are the inflows. The cash flows are the inflows, that is receipts, and the outflows. Receipt and the outflows, that is the payment of the cash and the cash equivalents. Any transaction which does not result in the cash flow should not be reported in the cash flow statement. The moments within the cash or the cash equivalents are not such cash flows are not cash flows are not cash flows because they do not change any cash as defined as ES3. The cash flow statement, which is the sum of the cash bank and the equivalents in the given case due to the increase in the rate of the foreign exchange 75 paise. There is increase in the change and the bank balance is the increase of 18,750. That is okay. In the is not a cash flow because neither there is a change. Okay. Cash flow of the DBX for the it increase the DBX cash flow statement exchange the resultant of the cash flow equivalents recognized in the balance sheet and reconciled with the note on the cash flow statements. Now guys, it's about 2 hours and 8 minutes and I have completed the cash flow statement earlier than the time decided. Let me show you. It's a 2:09 हो रहे हैं and now let me take a small break, then we will continue with the next chapter. मैंने यहाँ पर 500 लोगों ने कमेंट किया हुआ. Okay. Let's take a small break now, then we will continue with the next chapter.
Guys, if you are present here, mark your attendance by commenting. Let me come in within 5 minutes and तब तक के लिए आप लोग कमेंट कर दो कि आप लोग प्रेजेंट हो. So guys, here I am back. Now let's just continue with the studies. Securities conditions. So condition total of 68, 68 clause to 68 to the further states that no company shall purchase its own shares or otherwise or other specified securities unless the buyback is okay. Special resolution minimum gap of 1 year. Fully paid up complete within 12 months. Test condition: the maximum limit of the number of the equity shares to be brought back from the must not exceed 25% of the total paid up. Must not exceed 25% of the total. Must not exceed 25% of the total paid up. Must not exceed 25% of the total paid up capital. Maximum limit of the amount of the equity shares to be bought back must be exceed 25%. Must not exceed 25% of the paid up plus free capital. Paid up equity capital paid up capital and freeze. Net debt equity ratio must not be more than 2.1%. The debt equity ratio must not be more than 2.1% after the buyback. After buyback, the debt equity ratio must not be more than 2.1% to 1 of the after buyback. That is, equity should be capital plus equity should be capital. Equity should be capital plus free reserve. Equity should be capital plus free reserve. Guys, I think we should end this session here because बात काफ़ी ज़्यादा हो गई है and hope so we will continue with the same subject in the night or maybe in the morning जब भी टाइम मिलेगा. तो चलो अभी चलते हैं और अब ज़्यादा रात हो गया और मुझे मॉर्निंग में जल्दी उठना रहता है. तो चलो बाय बाय.